Hello friends, how's your weekend so far? US tech market has shown relative strength this week with Nasdaq 100 up over 800 points this week. Hang Seng Tech Index, however, was down around 100 points, closing the week at around 4,186 points. Why did market rebound? Federal Reserve minutes are out this week with quantitative tightening narratives coming in, but the latest personal consumption expenditure PCE data was giving market participants hope that PCE index rising only 0.2% in April being a sign of inflation peaking, and that's what the markets are cheering right now. As we know, whether Federal Reserve will slow down its pace of rate hike is dependent on the inflation path, given several headwinds like China COVID strategy impacting on China's demand and supply chain, as well as the Russia-Ukraine war hitting food and energy prices globally. A faster pace of interest rate hike could still increase the odds of global recession. So the question to ask ourselves right now is the rebound in US equities, particularly the US tech and growth stocks, for real? For me, I'm still careful and staying on the sideline. True enough that certain stocks like Coinbase, Square, AMC, GameStop, Limited is up by quite a significant portion in terms of percentage, and some were out even more than 50%. But I have seen such price jumps before, and also seen that subsequently the stock prices came crashing down again. Remember that Limited jumped from 82 USD back to around 130 before it started to tank all the way down to around 54 USD in the recent days. And I'm not saying that this will happen for sure, but there still remains a possibility for the stocks to come crashing again as long as recession risk is here. There's still no sign of an end of China's dynamic zero COVID strategy. And if this stretches into 3Q 2022, the recession risk grows because China is such a big economy, the second largest economy in the world. There's no way for US economy to grow on its own without the participation of China's economy. But if we are to digress to look at Pinduoduo's latest 1Q 2022 results, I'm still pretty pleased with various metrics of Pinduoduo, including its growth quarter-on-quarter for its revenue, as well as active buyers and monthly active users. But something about Chinese companies these days, and it's the same for Pinduoduo, is that the decrease in gross margin and net income margin given higher staff costs, sales and marketing costs, and R&D expenses will definitely hit profit margin of Chinese tech companies as well as Chinese companies going forward, not only in 2022, but likely extending into 2023 and 2024. Non-GAAP net income margin falls from 31% in 4Q 2021 to around 18% in 1Q 2022, which is a loss of 13% in terms of margin due to its higher cost structure as explained earlier. Nevertheless, Pinduoduo has proven itself to be a very decent Chinese tech stocks to be owned in current environment despite tough economic environment in China in 1Q 2022. The question is, how will it fare in 2Q 2022? Given its current share price of 48.3 USD at 61 billion market cap and an adjusted market cap of 52 billion USD market cap, current pricing implies current year multiple for PE at around 26 times. Is this cheap? This isn't cheap, but it's the typical multiple seen for Chinese tech stocks right now given the depressed earnings. Unless China economy slows even drastically into Q3 and Q4 2022, an entry right now may not offer the best risk-reward profile. Then again, if broad market sentiments improve for Chinese tech stocks that is able to detach itself from US rate hike, which I believe is still going to happen, then an entry right now may make sense, though one should still not be surprised to see Pinduoduo retesting below 40 USD. For me, I will stay out of Pinduoduo given that I already have an existing position in Chinese tech. A safer entry will probably be less than 36 USD for Pinduoduo. As always, this should not be construed as any investment or trading advice. Thank you.